Here we go, guys. Thanks for joining us. We're going to take a quick look at the gold futures chart. Great breakout today, acceleration. I'm sure a lot of people were sucked into this big candle right here, a lot of FOMO. And this is why you should not be buying gold right now, okay? Well, first of all, little quick chart school, 20-day simple moving average. That's when prices in and around the 20 is when you want to start scaling in, going in either to the long side or to the short side. Okay, that's what ignites the next move. Okay, number two, when price starts getting far and away from the 20 is when you want to start scaling out and for sure not scaling in or going all in. Okay, because all this is FOMO up here. Okay, and we'll give that in more detail here in a minute. But on the daily chart here, as you can see, we had an ascending triangle, and high percentage of times they do break to the upside. And if you've been following us on Twitter, Crypto Charts Joe, you'll see we've been playing this like a fiddle. And this was our little go-to little secret chart here we shared with our Patreon members. Again, on the 4-hour chart, ascending triangle here, and our measured move from the low to the high was 2.90, and we haven't quite hit that yet. Actually, I think it's $2,060 is our near-term target here. Yeah, $2,059.70 is what we're looking for. Near term, near term could be over the next, 2, 3 weeks by the, middle of April, let's say. And then we rolled over here. This was kind of a head fake here to get people to start scaling out of their long positions. We took an additional short position here. You could, if you follow us on Twitter, you could see that. And then we had a potential reversal here, and then confirmation. And our Patreon members know what that means. So we went in long. We've been long since this candle right here. Okay. And then next, why are we not scaling in at this point in time when everybody else is? Okay. Uh, well, if you look at the long range, yeah, our target's up here, 2000, 59, $2,060. However, when we start finally getting up into, 2000, 2070, then we're going to hit some big resistance up here, really starting with this high wick right here from March. Ooh, let me get back on there. March 7th of 2022. And then, of course, we have this high pivot over here from August 10th, 2020. Okay, so that'll be the third hit. And if you've followed me for any length of time, you know that the third hit of a resistance zone, high percentage of time, causes price action to pull back to the downside. Okay, high percentage of time, price does not break through that resistance zone on the third hit or the third bounce. Same with the support. If it's coming down, a lot of times the third hit will allow price to bounce up one more time, and then it's the fourth or fifth hit. Then you get the higher odds, higher probability you will break through. Okay. Now I know there's a lot of money left on the table right here as far as getting not getting in right now, but we don't know. Yeah, we had a breakout here. It looks good, but we haven't confirmed that. We really need to stay above this red dash line at, $2,015, $2,020. The higher the better, obviously. For a couple of 3 more days to confirm that this resistance now will be support. Okay. And then we could see about allowing the 20 to come back up and consolidate. As you can see here, one quick thing, I'm out of here. This high pivot right here, see this run from the bottom to the top, okay? And then look how far down, you don't really realize how far you are above the 20. So this is not a good range to get into safely until we started consolidating basically sideways here, allowing that 20 to come up. Okay. Then guess what? Yeah, we went to our 4-hour chart, and then we were, better able to pick that precise time to either go short to the downside or go long to the upside. Okay. Thanks for watching. If you want to learn how to do this too, check out our Patreon member site, or below we also have our introduction to micro futures that you can learn all the tricks that Wall Street doesn't want you to know. And we will see you on the charts.